Well, greetings and salutations, test taker. This is Dean Tenney coming to you live from my studio here in fabulous Las Vegas. And I just, boom. Looks like we're having, for some reason, some problem on the Facebook broadcast. But oh well, that's not a big deal. I'm not a big Facebook fan, anyways. I'll figure out backstage which is what is going on. We start, if you're new with us, we start with a debrief based on victorious test takers and what they have encountered on their exam. We end each session with a drawing for a coaching call at the end of our hour. In between, lots of live stream Q&A, as well as some fellowship with fellow test takers, victorious test takers and others. And so I'm going to start with some Series 65, 66 debrief. But let us know what series exam you're taking and where you're joining us from. We're usually all over the country in terms of people who are joining us. If you can remember, when you do have a question, if you can answer that or put a Q in front of it, your exam and a Q, then it's easier for me to pick it out of the chat. It's not a big deal, but then I don't spend a lot of time like saying, well, which exam are you taking? Because on this exam, it's a big deal. On this exam, it's not such a big deal. So that would be helpful as well. All right, so my wingman is out tonight, so it's just myself here. So be patient as I try and get with everybody. Here's some debrief. We'll start with some 65, 66 debrief. They passed. That's good news. 65, 66 both. No surprise, lots of unethical questions. That is one of the biggest pockets of testable content on your exam. So when you're taking an NASA exam, whether it be a 63, 65, 66, don't lie, cheat, or steal, what you should or shouldn't do, like breakpoint sales or selling dividends or churning or front running. These are things you shouldn't do. So, if you pass your exam, don't go to your manager and say, yeah, I can't wait to do some churning, some front running, some trading on inside information. Those are all bad things. Lots of questions about investment advisory contracts. That's all testable on all exams. High probability that you can't assign the investment advisory contract without permission of the customer. Very testable. And then that also gets triggered by change in control. I had 2 option questions with no math. That's pretty standard on NASA exams. You get very basic option questions, way more simpler than what you've encountered. If you're taking a 66 and had a 7, I think you're in pretty good shape already on that. If you're taking a 65, I don't know how much time you want to devote to options in terms of the payoff. Lots of questions start according to the Uniform Securities Act. No surprise. The Uniform Securities Act is the template that you're getting tested on. So I'm not surprised that. Let's see. Pretty standard stuff. Nothing out of the ordinary in the debriefs this week. 3 math questions. 1 was current ratio. 2 on current yield. That doesn't surprise me. You should be able to do current yield, what an investment pays you, by what it costs you. What it pays you on a stock is the annual dividend. What it pays you in a bond is annual interest. 1 futures question. Futures are even easier than options. You get them. But again, that whole section called derivatives includes futures. I'm not sure as a test taker how much you want to spend on that, not target rich. Duration, remember, is the fancy word for volatility. So you should be an easy question for you. You go long and low. You pick the bond with the longest maturity and the lowest coupon. Be careful they're not asking the reverse of that, which would be, the bond with the highest coupon. And look, EFA has been coming up quite a bit, by the way. EFA is the best benchmark for international investing is the test question. So, you get tested on the S&P 500, the Russell 2000, the Wilshire 5000, EFA, and Dow Jones. Got tested on the exemptions for lawyers, accountants, teachers, and engineers if it's incidental. Registration questions about a broker-dealer and its agents, no surprise. 1 dividend, 1 discount cash flow, 1 dividend discount model question. Again, no math, just, the inputs and outputs and what you use them for. 1 on types of orders, market orders, limit orders, that kind of thing. I haven't had anybody, this is interesting too on these debriefs. I haven't had anybody run into a mean, median, or mode question in a while. And they're telling me they didn't. And that's been kind of quite a bit that people haven't ran into it. 1 on technical analysis, 2 questions on beta. That's pretty standard. Volatility. This has been coming up quite a bit too. The tenure of the fund manager. You need to know whether the fund manager is accountable for that track record or not. So there's some debrief for you. At the end of the call, as I said, we do a drawing for a 30-minute coaching call. That would be Thursday. It's 5 p.m. It's recorded. It's shared. You can assign it or share it if you'd like. In other words, some people share tutoring. I showed up today and there are 6 people sharing a tutoring call. That's fine. You can share this call with others if you'd like. So if you don't need it, you can give it to somebody else, whatever you'd like. In terms of housekeeping, the best way to access all the free content I have for you on the channel is by finding your series playlist. There's almost 400 videos. So trying to find individual videos, I think, is not the way to proceed. The way to proceed is to find your series. And then that would be where you'd find all the videos for that series in suggested watch order. It's a buffet. Take what you like, leave what you want, don't. That's a free supplement. So I think my YouTube channel is the best free supplement to your paid study materials. If you're looking for a paid supplement, if you don't have a Kaplan QBank, I highly recommend it and the quick sheets. The QBank with the Guru 10 discount code for most exams is about $60. Quick sheets about 20. Brian Lee, my partner in crime, is kind enough to give us a 20% discount on his content at Test Geek. So that discount code is Guru20. And if you need to contact Brian, that would be his email there. And that would be where you can find his videos. He's got some free stuff on YouTube as well if you want to check him out in terms of due diligence. And if you need to get a hold of me, that's how you claim if you win the call, that's how you claim your winnings. Now, again, you can ask some of our victorious test takers what is and is not on the exam. So, Erica, this was your question that you asked me to do. Let me see if I can get I can get a whiteboard, but I'm not going to do the whiteboard here. So, Erica, this customer bought 10 30 puts for 3. That's money out. That was an opening purchase. And then I bought 5 30 puts for 4.5. So I now have a total of 15 contracts. By the way, this would be no different if this was a stock. If I bought 1,000 shares of Apple and then several weeks later bought 500 shares of Apple for a total of 1,500 shares of Apple, it would be no different. Now it says I close out 5 contracts for 7. Now it says using IRS assumptions. So anytime you get a tax question, you always guess what yields the most to the U.S. Treasury. And what yields the most to the U.S. Treasury is FIFO. First contracts bought, first stock bought, in this case contracts, are the first contracts you're selling. So unless you can identify these contracts, Erica, because what you'd like to do, by the way, is say that you're selling the 5 that you paid 4.5 for, because that would be less of a tax. But it says in the question you send me, using IRS assumptions. And the test point is IRS assumptions are FIFO. So that means I sold 5 of those for 7, and I bought them for 3. So I have 4 points profit on 5 contracts. So 4 points profit on 5 contracts. The answer to your question, Erica, is $2,000. $2,000. All right, so let's get into the comments. As I said, I'm getting an error from Facebook, so hopefully people figure it out. I don't know what's going on with Facebook. I'm not a huge Facebook fan. In fact, I'd be interested in your comments here or elsewhere, but I've actually removed the links from the YouTube channel and our Reddit communities to Facebook because I go, why am I sending people to Facebook? That's not what I have that there in case somebody's on Facebook. They can find us over here, but oh well. Let's see. I answered this question. Somebody said, where are the questions on retirement plans? You'd find them in the taxation lectures because remember, when you have a retirement plan, it's about reducing your taxes if it's qualified. If not, it's about tax deferred. It's always about tax deferred. Series 7, New Jersey. Woo! Series 7. All right. 66. All right. 66 from Detroit. Angela. Woohoo! Home of Little Caesars. Pizza, pizza. I know the founding family of the pizza. Who could think you can make $1 billion selling pizza? $5 a pizza, St. Louis, Missouri. All right. Welcome. Utah, beautiful place. I won't do this again, Chris. I taught a 65 class, and I've always wanted to make the drive from Vegas to Salt Lake. I don't know what I was thinking because I usually fly. I thought, man, that's a beautiful country. I got to drive that someday just to see God's beautiful country. And oh my God, they were ripping up the road. It ended up turning into like a 12-hour drive to get from Las Vegas to Salt Lake. 66, great. Well, communication, Sarah, is going to be important. And what you need to be able to do is retail communication. Retail communication is for more than 25. So if you're sending something to more than 25 prospects or clients in a 30-day period, the point about that is if it's retail communication, let me make a note here, 1026. What I'll do is link a little lecture I have for that. It has to be approved pre-distribution. If it's correspondence, 25 or fewer, then it can be approved by your principal pre or post distribution. I wouldn't worry about margin, Sarah. There's 3 or 4 questions. I am doing a margin lecture, a class. We've been doing these evening classes. There are some availability for that class Thursday night, 5:30. It's 90 minutes and it's $55. Only because, Sarah, test prep vendors like Past Perfect, for example, have tons of margin questions. And I got Sarah upset with people who are spending, a lot of money to get tutored on Past Perfect margin questions they will never see. Now, that being said, there are 3 and 4. You should definitely know the documentation required to do a margin account. The documentation, very testable, would be the credit agreement. That's where we tell the customer that he understands that he's borrowing money, he's paying interest based on broker call. We need the hypothecation agreement. The hypothecation agreement is where the customer says he understands he's pledging his securities as collateral for the loan. And therefore, Sarah, the securities are going to be in street name, the name of the broker dealer, the name of the broker dealer. And then the last form that's not required is the loan consent form. And that's where we say to the customer that we can lend his securities to customers who wish to establish short positions. Now, I would know, Sarah, that in a margin account, I have 2 or 3 lectures on this on the YouTube channel, by the way, and I told you I'll link to that as well. So on the replays, I put timestamp them, and then you can find, if you want, the whole video on that. Now, tonight, Sarah, we don't have a live stream available, and most Tuesdays after we're done, we have a 15-minute break, and then we have a Zoom session where we could do, margin on the whiteboard. There are 2 open positions for next Tuesday's live stream. And I'm more than happy to get a whiteboard and do some margin questions for you. There are also that class Thursday, the replay will be up after the class. That being said, we don't tell customers this, Sarah, because we don't want to use our money to settle their trades. But customers get 2 additional days to meet their margin call. So that T+2 is between broker dealers. So if, Sarah, you buy 1,000 shares at 40 in your cash account or your margin account, because the margin department determines whether monies or securities are due. So whether you owe me $40,000 because you're paying in full, or do you owe me $20,000, half, that's due T+2 + 2, 4 days. Now, I typically, Sarah, will get you an extension. And at some point, if you don't pay, I'm going to sell you out. And if you, Sarah, end up buying the stock and selling the stock without paying for the buy, we're going to freeze your account for 90 days. And that means you have no credit privileges. I would know that the credit extension of broker dealers to customers is controlled by the Federal Reserve Board. It's called Reg T. It's part of 1934. And I would know that presently Reg T is 50%. So you buy 1,000 shares at 40, you need to give me $20,000. I would know you can't buy options on margin. If you're going to buy an option, you got to pay in full. I would know you can't buy new issues on margin. If you're going to buy an open-end mutual fund where every share is a new share or an IPO and it hasn't been trading for 30 days, you're going to pay in full. And then I would know the classical margin equations, which are long market value minus debit equals equity. I think the best analogy is a house. Market value of the house minus mortgage equals equity. You might have excess equity, perhaps. And then on the short side, that's where most people get hung up. It's credit register, credit balance, cash, minus short market value equals equity. And I would know you need all times to maintain the account. Minimum maintenance, 25% long, 30% short. I'd know how to calculate market value maintenance, debit by 0.75, credit by 1.3. To be honest with you, Sarah, I almost think that little thing I did is enough to pass the margin questions on your Series 7. Now, I realize that test prep vendors, I published my first podcast. I've organized, Sarah, the channel based on your series exam like 7. And I still think it's the right way to go. But part of the problem with having it organized with series is there's some things I'd like to talk about that don't fit into a series playlist. So I started a little podcast, and my first episode, Sarah, was like a rant I'm making now about how it aggravates me that test prep vendors have overweighted content as it relates to the actual exam. My God, if you were doing this self-study, I don't care what test prep vendor you're using, you'd see all the pages on margin and go, oh God, that must be important, or they wouldn't spend all that time on it. When I used to teach a live class, who knows if I'm ever going to get to do it again. But people say, Dean, I need help on options and margin. I said, well, options are the bigger deal. Now, fundamental analysis is very basic in terms of the Series 7. If you're taking a 65 or 66, it gets a little more in depth about balance sheets and stuff like that. But fundamental analysis, Sarah, means I'm going to make a decision about the economy, then the industry, and then the stock. And I'd be interested in a balance sheet, an income statement, and a statement of cash flow. Those are called the financial statements. And you are going to be held accountable for some balance sheet stuff as it relates to fundamental analysis. You certainly should know the classical balance sheet equation. Again, let me make a note. I'll point again. I got another video, and I will post it in the replay on balance sheets. Anyways, you should know the classical balance sheet equation. I would be comfortable calculating working capital. I'd be comfortable with current ratio and the quick ratio or acid test ratio. I would definitely, by the way, most of the Series 7 math, Sarah, is division. So if you can't decide what to do, divide. That takes care of most of the math. And if you can't, Sarah, decide what to divide, take the first number and divide it by the second number. And that takes care of most of the math. But that being said, I would know PE ratio. Let's see, what else? You should definitely have a general understanding of what happens. General, what I mean by that is when a company declares a dividend, it becomes a current liability and working capital decreases, that kind of thing. What happens, based on people converting bonds. So not a big deal. No, so I would tell you that all those things, Sarah, none of those would make me believe that's how you missed your mark on the 7. So if after we're doing debrief and you missed your mark and you said, Dean, I think it was communication, margin, and fundamental analysis, I'd say, well, my friend, I don't think so. Target rich environments would be, Dean, if I'm struggling with options or munis or mutual funds, those are the ones that could be material to your success. And then in terms of not being able to score back 65, I don't know when your test date is, Sarah. You can put back into the comments your test date. I hope you have one, because, you should have a test date before you start studying for 2 months. So it depends on whether that's a problem or not in terms of your test date. I don't think so. I've had people score in this between 60 and 70, your risk, but I've had many, many people pass more than not with a score like that. But if you have time, Sarah, if your test date isn't too close, what I would do is give yourself permission to take a couple of days off and just refresh and reset and come back to it. And sometimes you'd be surprised. Your brain comes at it when it's had a little rest, it might be a little better. So I don't know how many hours you're putting in studying, but that could be part of it. You might be studying too hard. So, what I'd ask you to do is commit to a study block of 45 minutes, an hour and a half, taking 30-minute breaks between those study blocks. And if you're a part-time studier, maybe it's only one that you can do in a day and you got to do 2 or 3 on weekends. If you're full-time studier, maybe three blocks. Brian and I were talking earlier today, and, you can't stack practice exams upon practice exams. So you need to do a practice exam. And then what you need to do, Sarah, is do one a day. That's max. The next day, I wouldn't do another practice exam. I'd do remediation. I'd use my, hopefully your QBank provider has a performance tracker. And then I do some remediation, watch videos, read, do some questions, and then maybe another practice exam the following day, remediation, rinse and repeat, rinse and repeat. Woo! Well, those third ones, I want to hear from you. I'm sending you good test vibes. We had a guy on our Reddit today. We have sister Reddit communities, and in our sister Reddit for the Series 7, the guy passed his third time. And I told him, I said, who cares about your first 2 strikeouts if you get a walk-off grand slam home run? Woo! So hopefully that's what will happen for you tomorrow. So we're all sending you good test vibes, good test vibes. Well, I don't know if it makes you feel better. Puts are the ones that people struggle with most often. So there are 2 types of contracts, calls and puts. And I think that you kind of have it backwards in how I would think about it. I was getting ready to lease a high-end automobile, and the car dealer told me that at the end of the lease, the car would be worth $60,000 or more. I said, really? Really? And again, I will put a lecture here for you, timestamped on the replay. But anyways, I said, listen, Mr. Car Dealer, you and I have opposite expectations about the value of the car at the end of the lease. He says, yeah. And I said, well, whenever two parties have opposite expectations, we can make a bet. I say, what I'd like to do is I would like to pay you a $4,000. And he goes, what's the catch? I say, for this $4,000 for this premium, I would like to have the choice to put the vehicle to you at the end of the lease for $60,000. I want a choice to sell. Now, that's where most people get hung up. They go, oh, Dean, I don't get it. I buy it to sell it. Those are different its. When you buy a put contract, you're establishing the choice to sell. So here I paid 4 points to be able to sell at 60. I paid $4,000 to be able to stick the car to the dealer at 60. I'm the put-er. He's the put-e. We're going to have put-ers. We got to have put-es. Do I want something in written form from him? I certainly do. I, car dealer, agree to buy said vehicle for $60,000 at the end of the lease. So let's say it's the end of the lease and the car is worth 40. Should he have the expectation that Dean is showing up? So he says, it's the end of the lease, the car's worth 40, and I have an obligation to buy at 60. Do I think I'm going to be seeing Dean today? The answer is yes, because that contract has intrinsic value. It has 20 points of intrinsic value. So when I make him perform on the contract, he said, my God, Dean, you're making me pay 60 for a stock that's only 40, or in this case, a car. The underlying interest on the exam is stocks, but this is a car. I say, yes. He said, I'm going to lose $20,000. I go, no. You get to keep the 4. You're only going to lose 16. He says, man, you're so good at my loss. I go, well, because it's my gain. So put contracts, all contracts have two parties. The short put is the person who's obliged to buy the stock. And you're not going to be obliged to buy it. So I always tease people when they sign up for tutoring, right? I say, you've gone long the tutoring class. You paid the premium. You have a choice. It's a two-party contract. When you do the opening sale, you're a potential victim. In a call contract, you get victimized when you have to deliver the stock at less than the current market price. In a short put contract, you get victimized when you have to buy the stock at higher than the current market price. So that's what a short put is. The best case when I'm short, call or put, straddle, doesn't matter, spread, is I agree to be a potential victim. Nobody victimizes me and I get to keep the money. I get to go neener. In a long put, I have a choice to sell. Now, I'm either going to have a choice to sell to speculate, meaning I don't have the stock, or I'm going to use it to hedge. My example, my analogy of the car, I use that put to hedge that long car position, right? I can sleep better knowing that I can stick that car to somebody at 60. So there are hedgers and speculators. I think you're more likely to see the long put as either a speculative position, a smart bear. By the way, long put as a speculator is as smart as bears go, because if you're wrong, you just lose your premium. Whereas if you're a dumb bear and you short the stock or you short a naked call, you have unlimited loss potential. So, but usually I think that's where people struggle. Again, short puts, people, I don't get it. I sell it to buy it. Those are different ends. When you sell a put contract, when you're short a put contract, you've received the premium, but you're obligated to buy the stock, right? So it's dollars in on the short put, but it's dollars out when somebody sticks it to you. So wouldn't feel bad. I mean, that's common. I don't know if that makes you feel better. I get more worried when somebody's confused in some way I've never seen somebody confused. That's when I get worried. I say, well, I've never seen anybody confused that way. I'm not surprised. ADRs on every test. So an American depository receipt, you should definitely know what that is. It's a foreign security traded in the U.S., right, as a U.S. security. So I use Telefonos de Mexico. It could be Telefonos de Mexico. It could be Nestle is a Swiss company you could buy as an ADR. It could be Samsung, a Korean company. And when you buy as an ADR, test question, you still have foreign currency risk, right? Because they're in my Telephones to Mexico example, they're collecting the phone bills in pesos. So I can't imagine any exam, SIE, Series 7, 65, 66, in which you don't get tested on ADRs in some way, some fashion. No, Claudia, I just gave you what the index is. You just need to know which indexes are the appropriate benchmark. So you didn't tell me what exam you're taking, but it's more of an issue on 65, 66. You need to know the Dow is not a proper index weighting or benchmark for anything because it is price weighted, not market cap weighted. I mean, they simply on the Dow, Claudia, take the 30 stocks, add them up, and then divide, which is a stupid way to do it mathematically. And so that would not be an appropriate benchmark for a money manager. And then you need to know what would be the benchmark that would be appropriate. For a small cap manager, that would be Russell 2000. For a large cap manager, that would be the S&P 500, as we mentioned when we started. For an international investor, it would be EFA, if you're making international investments. Wilshire 5000 best approximates the total stock market. So, Claudia, it's aim and shoot, point and click. If you're taking a 7, I would know that the VIX is based on the S&P 500. The VIX is known as the fear index, and it's volatility. And so sometimes you do get asked on the 7 about what index underlies the VIX, and it's the S&P 500. You also get asked about beta, and beta is also in comparison to the S&P 500. Sure, that's fine, Chris. I would just tell you, Chris, though, I like Nico. I don't see if Nico's in here. Nico wanted, it's a 30-minute call, and he wanted to do an entire practice exam. I'm like, I'm like, Nico, it's a 30-minute coaching call. It's not but we can certainly use my QBank or your QBank, Chris, if you win it. And a lot of people like to do that in tutoring as well. Just do some practice questions, and I'm happy to do whatever you want. Chris, I only call it a coaching call to distinguish it from tutoring. So, we don't sell coaching calls. That is something that comes up free. I do have scholarships available on coaching calls and classes. So if you see one of my videos and it's missing timestamps, I'm putting in those empty places until I timestamp them. If you are watching this video anyways, and you'd like to timestamp it for me, please do so, and I'll give you a coaching call, or I'll give you a free class or something. Yeah, there you go. So St. Louis, all right, 66. I love your smiles. I love that profile picture. That looks like some good energy. I don't think I'd want to have a profile pic that's got that good energy, because then if I was having a bad day, everybody would expect me to be, happy. Cincinnati, woohoo! Is that Fidelity? Cincinnati, Fidelity has a big operation. Yeah, well, modern portfolio theory is not going to be kill you. But, theory isn't truth. It's just a way of explaining it. I think you mean EMT. I think you mean efficient market hypothesis, not theory. But of those two, you're certainly going to get efficient market hypothesis. And I would know the one that's a high probability on your 65 and your 66 is the strong form, which means nothing works. And then that means what we should recommend is an index fund, mutual fund, right? Then you have, weak, you have semi-strong. That's definitely there. It's going to be aim and shoot, point and click. It's not going to be, some in-depth thing. And the modern portfolio theory as well. The thing that shows up there is, again, not the theory itself, but the idea of like negative correlation, providing additional diversification. So what I mean by that is if I, already have lows in my portfolio, modern portfolio theory would suggest that maybe Dean should put Home Depot if I already have lows, because they have almost a perfect correlation. They move the same way. So what I would want to do is add something that has negative correlation, goes the opposite way. So they will ask questions like that. But again, if you tell me that's how you missed the mark on your 66 or 65 because of either modern portfolio theory or efficient market hypothesis, I'm going to say, I don't think so. Woohoo! There you go. There you go. So I like that profile. There's a narcissist kryptonite. I like it. I like it. Switching it up. Sometimes you need a different voice. There's a fine line between too many voices and not enough voices. And so I just had a conversation with somebody today, and he missed the mark. And I said, well, what was your practice test scores and what was your QBank usage? And it looked like he had used a lot of his QBank up, and he had his scores were high enough that I thought maybe he had memorized questions and answers, because with the scores he was sharing with me, I would expect to pass. And I said, well, I think you're going to have to invest in another vendor or some more resources here so that we can mix it up. So I'm not a believer that you should be monogamous in your study efforts. So even Kaplan, reached out to me the other day because they saw I was doing those evening classes. I'm not a Kaplan employee, but Kaplan pays me to do classes for him. And, pretty senior guy. He goes, Dean, we saw these evening things. What's up? I said, well, I'm just seeing, what's out there in terms of the channel. It's not competitive. I'm not offering 4 to 8 gram courses like I teach for you. So, but obviously I didn't think Kaplan was the best. I wouldn't be teaching for them and I wouldn't be, offering the discount code for you. But the STC, Kaplan, Knopman, I think are all great vendors. Only vendors that I'm not a big fan of are Exam FX and training consultants. There, I highly recommend you get a paid supplement or free supplement. And then Past Perfect, I'm not a fan of it because they kind of give you too much. And you might want to have a paid supplement just to confirm what are test issues and what are Past Perfect taking you into the weeds. Yeah, there you go. Giselle's. Well, it depends on your portfolio. It depends on your portfolio, right? So, Giselle, I'm either going to be speculating or hedging. Let me mark this 3036. And again, I'll put a little video there for you on non-equity options. Okay, so let's get started here. So this is testable for everybody. Well, unless you're taking a 63. This calls for everybody, 24s, 9, 10, 63s. But when I say everybody, I usually mean like, SIE, the 7. If you're taking a 6, I started at Reddit's for 6s. I feel 6s don't get the love that they should. But so if Giselle, if I'm speculating or hedging, so if I have a portfolio and I'm worried about a particular selection in that portfolio, if what I'm worried about, Giselle, is non-systematic risk or selection risk, I would buy a put on that particular security. So we're talking about hedging. When you come to the options market, you're either a speculator or hedger. I'm first talking about hedging. So I'll give you a little bit more when we get there. So that's what I would do. Now, if on the other hand, Giselle, I'm worried about my entire portfolio going down, I'm worrying about systematic risk, the tendency of securities prices to move together, then I would buy a put on the index that most closely approximates my portfolio. So now that your point about narrow based versus broad based, it depends on what kind of portfolio I have. If, for example, it's a tech heavy portfolio, I would buy a put on the Morgan Stanley Tech Index, right? Because that would more closely match my portfolio. The idea being my portfolio goes up, my index, or my portfolio goes down, my index put goes up. So it's based on the portfolio of securities that I'm trying to hedge. We're talking about hedging first. If I have a broad-based portfolio that more approximates the S&P 500, then I would buy that broad-based index option to protect it. So that's the first part. So we're trying to match. It won't be a perfect correlation because, my portfolio isn't a perfect correlation, but I can get close. I'm not going to have to do the math. I can pay a math person to do it for me. Now let's talk about speculating. So, there were a lot of call contracts I could have bought. And I bought a call contract on one of the things I was looking at. And any other one I would have bought went up, and this one expired worthless. So once again, Giselle, what I experienced there was selection risk. So why complicate my life? If what I think is the tech sector is going up or down, I'd buy a call or put on the tech sector. I'd use an index on the tech sector. If, on the other hand, I think the entire market is going up or down, I'd buy a put or buy a call on the broad-based index. So that's how we decide where we're going to buy. Now, you said buy. So buy means I'm either bullish on that narrow-based index, tech, for example, the sector, or broad-based, I'm bullish on the entire market, the S&P 500. So either that or I'm hedging, right? Because you buy for protection, you sell for income. So from your question, I don't know if we're buying the narrow-based index or broad-based index call or put to speculate or to hedge, but either case, that's how I would make that decision, right? So it depends on what you're trying to bet on. If you're a speculator, what are you betting on? Are you betting on a particular sector? Then you'd use a narrow-based index. Or you making a bet on the market as a whole. If you're hedging, same deal. So hope that was helpful, and I'll post a little video next to the timestamp on the replay. By the way, that distinction between selection risk, non-systematic risk, and systematic risk is very testable. And another, I say high probability, guaranteed kind of question. The easiest way for somebody to avoid selection risk or systematic risk, very testable, is through diversification, right? And then the easiest way for most folks to do that is a mutual fund. So that's very testable. You didn't start the Kaplan test. Well, this is Tuesday. This comes up a lot. I get on my podcast. It's called Build a Study Plan. And so you can access that video podcast on the YouTube channel or on Spotify. I'd be interested in how much of you guys have access to Spotify. People should tell me I should be on TikTok too, but I'm just an old dude. So, I'm not trying to be all over the place. I'm trying to stay there. But anyways, in that, I tell you, about 7 days out, I would like, if I were your accountability partner, to get a practice test score to see where you're at and you're executing your study plan so we can find out whether you need remediation or not. And again, I will put next to this in the timestamp a replay of that podcast. Anyway, so what I'm looking for is, do we need remediation or not? So let's say you're 7 days out. So you're testing Friday. This is Friday of the week before. And you call me and you get between 60 and 70. I said, well, you're at risk, so, I'm not going to lie to you. The vast majority of people between 60 and 70 still pass, but it's not where we'd like to be. As your accountability partner, I'd like you to be consistently in the 70 range. Below 60 means you have a knowledge deficit problem. But you don't wait too long. I can't tell how many people wait they do this on Wednesday, then there's no time for remediation. Now, as I said, you don't want to stack practice test upon practice test. So while your accountability partner, you say, well, Dean, I'm going to do 3 on Friday. No. You're going to do 1. We're going to get a score. And then the following day, we're going to do remediation. Hopefully there's some commonality where we're missing. And we're going to do remediation by, watching a video, doing some reading, maybe, do some practice questions. And so that was, you did that Friday, maybe Sunday, we do another one, Sunday or Monday. So I basically say, how many practice exams are you going to commit to between now and your test date? I would, as a minimum, want to see 3 between, Friday, if I were accountability partner, and your test date. The last one you should do, if you're my hypothetical on Friday, you should do that Wednesday. And that would be your last time to do an intellectual inventory. So that would be the mastery or Brian's Test Geek practice final, which has very strong correlation. So we have a good idea of whether you're at risk or not on Wednesday, testing Friday in this example. And then hopefully, again, that's a 70 plus score on a practice test that we can, rely upon. And then that Thursday morning, you should do, I think some people give bad advice in that they tell you shouldn't do any questions on the day before your exam. My next podcast is the day before your exam. And I think that's a bad thing. I think you should do 20, 30 questions just to keep your rhythm. So you want to establish a question rhythm, and you don't want to destroy the question rhythm by, being completely off on the day before. But you should fold up your study effort on noon. So hopefully you've done 3 or 4 practice exams, noon of the day before the test. We have a good idea where you're at. And then, you can't cram. So there's nothing you're going to learn in the remaining last hours. And what's more important is getting some rest. So you need to relax, whatever you like to do to relax on, in my example, the night before. My case, I like to, have a single malt scotch and a stogie and, just think about my success tomorrow. You're just kind of trying to get you guard your psyche or get your psyche in a good spot, and then take the test. So let's see. So you're testing Monday. This is Tuesday. So I would want to see 3 or 4 practice test scores from you. The more the merrier. Don't do 11 STCs. Woo! Avoid trying. I know it's difficult, but avoid trying to memorize questions and answers. Try to avoid that because you want to do the concepts. By the way, another common misconception: we're not learning through doing practice tests. So, guard yourself against people at your firm who may be old school people and tell you that you should do, just do practice questions and practice tests and go test. That's not why we're doing practice tests. We're doing practice tests to get an intellectual inventory of where we're at, right? So we're not trying to learn by missing questions. We're trying to miss questions to find out what we're weak in. It's counterintuitive, but we're trying to miss as many questions as we can to find out, what needs improvement. P.S., it's again counterintuitive. I had a guy told me he missed 50 questions. I go, great, let's try for 100 tomorrow. So that's what you're trying to do, right? Just again, it's a buffet. Take what you like, leave what you don't. I'm not a big fan of doing one and then queuing up the answer, because it slows you down and you end up, reviewing stuff you already know. So in my case, I'm going to do the entire practice test, and then I'm going to go over the ones I missed. The difference is I'll be able to do tons more practice questions than you're ever going to get to if you're doing a question at a time and then queuing up the rationale. Now, when you're doing practice questions, that's fine if that's what you want to do. But when we get into the practice test mode, I'm not a big fan of that. You want to be, sitting down. By the way, do it like a real test. So I also suggest you might want to think about taking some breaks at the exam. Maybe you want to take a break every third of the way through the class or every half. Do that on your practice test too, so you know what that looks like in terms of getting through it, the number of questions you're going to have to get through in the time allocated to you. It is so frustrating to me when people tell me they ran out of time on the exam. I go, how could that have happened? Because that's a sign you didn't do your practice test, because you should know what it takes you to kind of work your way through it. It's another reason I believe in class strongly, or joining us in those evening classes or your study blocks of an hour and a half, because you want to build your concentration level. I had an adult learning person. They told me, Dean, your videos are way too long because people can't sustain concentration for more than 15 minutes. I said, well, then they're in trouble. They got to go take these tests, because these tests require you to be in a sustained concentration mode for, an hour and a half, 3 hours. So try and simulate that as much as possible. There you go. Again, Brian and I disagreed. Chris, we're collaborating on a podcast. And I truly believe, Chris, I guess it's my old school accountability partner where, I hired and fired people. And so, Chris, I call it the big brother key. If I don't, but, some accountability partners do. And I can see what you have done activity wise. And it's harder for me to monitor videos and that you read. What's easier for me to monitor is how many practice questions they're doing. And God forbid you miss your mark and then I pull up your QBank usage and you didn't do enough practice questions. So, Brian, there's lots of people who don't think you should need to exhaust the QBank. I'm just telling you, as a test taker, I put that on my thing to do. So in other words, if it's the Kaplan QBank for the 7, that's 3,600 questions. I'm going to divide that by how many days I'm going to be executing my study plan and know what it would take me to exhaust that QBank. I may not. There's a lot of people who think you don't need to exhaust the QBank. I'm just telling you, if I were your accountability partner and you pass, who cares? I had a real accountability partner, and he was telling me I should give this person a hard time. I said, that guy's doing us a favor. He's going to pass. So why are we bothering him? Leave him alone. He doesn't need to do what we're talking about. But, good news, he's going to pass. But if you don't pass, then that's something people are going to start looking at in terms of deciding whether you're going to go back down there again. I sure do. Oh, I got to do that, Nikesa. So, just send me an email, deantenney@gmail.com. I got to get that done. What happened, Nikesa, is that I actually have the front of that playlist are narrative lectures that cover that content. So there is some holes there and I need to do it. So I'm taking your word for it. It's 3E through J that I need to do. So I'll make a note to myself right here that that's something I need to do. I just haven't got around to it. I'm a one-man band, so it's hard for me to. I'm thinking that because I really probably need to get an intern or somebody to, the channel. Thank you so much for your support, but we just crossed over 1.5 million views and like 14,000 subscribers, and I pride myself in the case on being able to return emails in a timely fashion. It's becoming difficult because there's enough people that if they say hi or thank you, it can mess up my inbox. So, anyways, Kaplan and people have been saying, well, gee, Dean, what's your game plan with this channel? I go, I don't know. I've been kind of making it up as I go. So, so I'll try and get that done for you. So, Nikes, if you do send me an email, just let me know when your test date is, and I'll try to do that. Maybe, Nikes, what I can do is, if I don't get it done, maybe I'll just, put you on a Zoom and we can do it together or something, just to give me an excuse to record it and get it done. 1 week. Oh, okay. So maybe not. We'll be able to get that done in that fashion. Yeah, well, even Sarah, I don't know if Erica's still with us, but she's using Past Perfect, and like that question she sent me to do with we buy 10 puts for 4, and then we buy 5 more for 4.5, and then we sell 5 of them for 7. Outrageous! It's just outrageous. So, I'm familiar with the basics. Yeah, Cal and Push are memory aid devices for those of you who are participating in spreads. We use Cal to remind us call out of the lower to get the break even, and we use Push as a memory aid, put subtract from the higher to get the break even in a put spread. So the QBank on Kaplan is $60 with my 10% discount code at checkout, Guru10. So Guru10 at checkout gets you that for about $60. I want to say it's a little under $60, but that's kind of what you can do. I highly recommend it. So No worries, no worries. Like I say, it's just helpful if I know what you're taking. Thank you, Chris. Yeah, I think it's about 50, $60. I think so. So yeah, I think you can get it for like so listen, I know that for some people, listen, the channel is a free supplement. I mean, and obviously I think it's the best free supplement out there. No surprise. I know you're not surprised. But if you have the resources, now is not a time to be frugal. I mean, if it's necessary, you have to be frugal because you don't have the resource. I get it. I mean, you're starting out. And that's what I love about our business. If you're poor and you deserve to be rich, this is the business for you. But I understand when you might be struggling in the beginning. But if you do have the resources, man, I would certainly want you to spend some money on a paid supplement. I think Kaplan's a great paid supplement. If you don't already have that Q Bank, Brian's a great paid supplement. I have be careful. I had one guy, he bought every test prep vendor's course, and his name is David. I said, Dan, David, you realize that's just the same stuff sliced and diced differently. So don't get too carried away, right? So, but if you have the resources, go for it. All right, S10, you're going for your Series 10 sales supervisor. Woohoo. Yeah, I'm sorry, Eli. That's like that gap I have. Like I say, is a one-man show. The problem, Eli, is there's not many 9s and 10s out there. So, Nikessa, she's taking her 65, 66. So part of it is a time constraint and part of it is a numbers game. But I did, Eli, put up a 10 practice final. I did that. So, if you get that done, then you're done. You get your 9 already, I think, right? So you should be done after that. Yay, Erica's still here. So I forget Eric, I don't know if you were here when I was just saying, I just feel for you with your past perfect questions that you sometimes find because, they have questions. And so it's like, oh my God. By the way, that's one of the reasons I told you I added the margin class on Thursday night because people, might charge $225 for tutoring. And I've really had people spend a lot of money with me just to go through past perfect practice questions that they're never going to see on the test. I think one of the reasons they do it is that I know that some firms won't let you move on from till I don't forget what they call it. There's a term for it. I think locked learning or something where you have to complete chapter unit 18 before it'll let you queue up 19. And I got into it with an accountability partner with Past Perfect. I said you got to let them move on. That margin chapter is not worth it. I get that you want them to get like a 90% in every Past Perfect chapter, but that's a total waste. They should be moving on. Leave it and circle back on it because there's way more performance opportunities elsewhere. So I think Richard pretty good. I mean, Kaplan spends a lot of time. I'm in touch, Richard, with Kaplan subject matter experts all the time on the NASA exams. That's Chuck Lowenstein. And on the Series 7, that's in the 24s and 9s and 10s, it's Bill James. And they work hard to try and come up with phraseology that they think approximates the test. I would tell you, Richard, when I take a test, I like to get to the first question I know the right answer to. That's like, oh, something on this exam I know. Maybe it's like the ADR question, for example. And if you're doing your Kaplan Q Bank and you exhaust that, I don't think you're going to find anything that's going to be too surprising to you. That's the other reason that I kind of disagree with some folks about how many practice questions you should do, because the more practice questions you do, the more confirmation or non-confirmation you get of a test issue. For example, I was talking about Eric on Past Perfect. Sometimes she'll send me a question and I'll answer it for her and I'll say, don't worry about it. But every once in a while, she'll send me a question. Oh, you better know this. So that's the other thing you're looking for is confirmation. I don't think Kaplan gets off the reservation as much as Past Perfect. STC stays on the reservation in terms of what you can see on the test. STC just doesn't have as many practice questions in their Q Bank. And it's not as, you can't manipulate it as much as you can a Kaplan Q Bank. There you go, 66. The Kaplan Q Bank on NASA exams is very good. Thanks, Chris. I always like, Chris, when people, when you come to our live stream, sometimes you got to take my word for it, but it's always good when we have other test takers in the live stream who can verify. I don't know why you wouldn't believe me when I tell you something, but it's always good to get confirmation from somebody who's simpatico with you. Discount code for Kaplan is Guru10 at checkout. Guru10 at checkout. And for Test Geek, it's Guru20. Guru20. Erica, you drive me nuts. You should have been here. I went over that question at the beginning of the live stream. You were at the top of the queue when I started. I said, here's a question from Erica. And I went over it. So I will send you an email. I'll go over it again. I'll do it in a video and I'll post it on the channel. So and then I'll answer it by email as well. By the way, you can submit your questions by email to me, and then I can put them on the banner. Here is your question, Eric. I'll do it one more time. A customer bought 1030 puts for 3 and 530 puts for 4.5. You close out 5 contracts for 7. Doesn't matter that this is options, does not matter, right? I think this is your chat. I had this exact thing earlier today. At the very beginning, I had my own banner with this exact question. Anybody want to help her out in chat? So now we sell 5 contracts for 7. So 4 points profit on 5 contracts. The answer is 2,000. So I think I went over that. Now, maybe you're out of the queue. Maybe I got you in the wrong spot. All right. Easy way to memorize certain ratings. The only one that's important, Nico, is BBB under Standard & Poor's is investment grade, less than BBB. Double B, for example, is less than investment grade. You don't need to worry about Moody's. The only thing you need to know about Moody's is Moody's on the for TANs, bands, and RANs is a MIG rating. You're taking an SIE. I am worried a little bit, Nico, about the questions you're asking in your test prep vendor because you have lots of questions that I think are more 7 oriented. So another one of my gripes, a lot of test prep vendors don't have content for SIE, and what they do is they chop. I call it the chunk theory. They take a chunk from their 7 and they put it into the SIE, and it may or may not be appropriate. But the big one on the test is Standard & Poor's, BBB investment grade, double B less than investment grade. Very testable. Know the 2 risks in bonds are credit risk and interest rate risk. 65. Well, I just brought it up. You need to know TANs, bands, trans. So tax anticipation notes, very testable on Series 7. Revenue anticipation notes, tax and revenue anticipation notes, and bond anticipation notes. And you should know that these have a unique rating known as a MIG rating. So MIG ratings are associated with municipal notes. I think of these as the muni equivalent of borrowing against receivables. It's like a payday loan. So, for example, California's underwriters are JP Morgan and Bank of America. And so let's say that California is underwriting $2 billion worth of bonds. And California, the issuer, says to JP Morgan, Bank of America, can we have a $500 million cash advance? And they say, sure, here's $500 million. You give us a bond anticipation note. And then when we raise the money from selling the bonds, you pay back the $500 million and a little extra. You know, my example, California, they're anticipating having some taxes in April, but they'd like the money now. So they do a cash advance. Well, Kyler, if we're using foreign currency options, the first point is the US dollar is not a foreign currency. Again, I will link to a lecture on non-equity options on the replay. But so hedging means, remember, I'm worried about the currency exchange rate, the spot market working against me. So if I'm a UX exporter, I'm Boeing and I'm selling my planes in Japan, I am not afraid of the yen going up because that's great. I get more dollars. What I'm afraid is the yen goes down and I get less dollars. So what I'm going to do is in the currency markets, the option, I'm going to buy an option that will offset my loss in the spot market. So I just told you that if I'm Boeing, I'm worried about the yen going down. So EPIC is a memory aid device. EPIC, exporters buy puts, importers buy calls. So if I'm importing French wine, so French wine, that's Europe, right? So I'm not afraid that the dollar is strong. Now, I'm not being facetious. The dollar is not a foreign currency. The dollar is not a foreign currency. Can't do anything on the dollar. So if I'm going to Europe to buy wine, I'm not worried my dollar is strong because I end up buying more wine. What I'm afraid of is my dollar is weak. Now, to say the dollar is weak is meaningless unless I tell you the other currency. So they say the dollar is weak means I'm going to get less wine. So what I'm afraid is the euro is going up. So I would buy a call on the euro. A good memory aid device, Kyler, I'll put it in the replay, is EPIC. Exporters buy puts, importers buy calls. It's from the U.S. perspective. So again, if it's a foreign perspective, it will be the opposite. So I'm importing wine from Napa in Europe. I'm buying California wine I'm in Europe. Now I'm not afraid my euros are strong because it gets more and more California Napa wine. Remember, the hedge is about what if I'm wrong in terms of the exchange rate. So what I'd be afraid of is that the euro goes down against the dollar. And so if I'm a French importer, I'm going to buy puts. So from the French perspective, the foreign perspective, it's the opposite. The French importer would buy a put on the euro. And again, if I'm an exporter, if I'm exporting, I'm German and I'm exporting German cars. Again, I'm not afraid that the dollar is strong because that means I get more euros. Again, I'd be afraid that the euro is going to go up and I'm going to have a problem there. So I would buy a call. So it's the opposite. Good way to remember is epic. Usually epic is different. Clyde 506D and 504D. 506 is private placements. And so when we're doing private placements, remember, you can only sell them to accredited investors. I don't know what exam you're taking. Again, I think you're taking the SIE, and I'd be worried about your test prep provider if they're asking you an SIE about 506Ds and 504Ds. 504s are for 5 million, and 506s we can raise as much money as we want. And there wouldn't be a D, it would be B and C, and about whether I can solicit. And definitely for everybody needs to know what is an accredited investor. It's $1 million net worth exclusive of your primary residence or annual income of 200,000 for the last 2 years with the expectation of that this year, and that you're married and filing jointly 300. Well, QIDs, well, I'll tell you what I'll do. I'll post that on the channel. So when you have a Kaplan QID, I make a video and I'll post it there. So that's 1358677. So if I don't do it tonight, I'll do it first thing in the morning. So just check out the YouTube channel video page, and I'll have a video that will explain that to you. I'm not sure why somebody would be long a stock and do the spread, but I'll take a look at it and I'll make you a little video and I'll post that tonight or tomorrow. By the way, that's the way to go. By the way, one of the other advantages of a Kaplan Q Bank is you can give me the QID and I can bring it up backstage and see what you're looking at. I'll help you with any question, whether it's past perfect questions or whatever, but it's easier if it's a Kaplan question. Okay, well, we're coming towards our drawing. A credit, well, yeah, Clyde, good point. Credit spread, again, I'm worried about what exam you're taking. So if you can remember to put a Q, so I can pick it out of the chat and tell me what exam you're taking. As it relates to economics, it's the difference between what high credit quality bonds pay and low credit quality bonds pay. Spread always means the difference. So the credit spread is the difference between what high credit quality bonds pay and low credit quality bonds pay. So if I'm looking at the credit spread and it's widening, that means people are getting nervous. That means they're selling off their lower credit quality bonds, their junk bonds, causing the price to go down and the yield to go up. And then they're buying high credit quality bonds, causing the price to go up and the yield to go down. So if we see that credit spread widening, that would be a negative economic indicator. Now, on the other hand, if people are comfortable about the economy, they're willing to accept a lower yield. They're going to buy some junk bonds, causing the price of junk bonds to go up and the yield to come down. They're going to sell their treasuries, causing the price to go down and the yield to go up. And so it'd be narrowing. And if we see that credit spread narrowing, that would be a positive economic indicator. Again, I think that's, that's testable more on 65 than it is on the other exams. So maybe you're taking a 65. I would know that on a 65. And then I would definitely know the spread always means the difference, right? So what's the spread in the ball game? It's the difference in the scores. March 22nd. All right, cool. Yeah, well, it just depends. I mean, I don't like people, Meg, I think that Meg has a good point. You want to be comfortable. I personally don't like you changing your exam because it gives an artificial sense of like relief that you didn't earn. So I'm kind of a old school, but yeah, if your employer, if you're not where you need to be in terms of remediation, then maybe we put it off. I would tell you, it depends on your sponsoring firm about how they're going to, smile on that or frown on that. Depends on your firm. I just think it's a little thin, Jonathan. So I just think you should supplement it. That's all. Whether you do that with my YouTube videos or how you do it. I think Q banks are really important. Yeah, I just said why I don't really care for training consultants just because I just think they're Their Q banks are a little thin, so that's it. That's why I don't like. I shouldn't say I don't like them. I just think you should consider a supplement. We are not doing a live stream tonight, Erica. No live stream tonight. As I told you, it's not available every Tuesday. Some Tuesdays, it is available next Tuesday, and there's 2 spots left. All right, so we're ready for our drawing. See if I missed anything. What are the main qualified dividends? Niket says based on how long you held it. So, if you buy it 60 to 90 days, wouldn't worry about that. But then it's a qualified dividend and it's taxed at less than ordinary income tax rates. So dividends aren't going to have any tax basis. Dividends don't have to tax cost basis about an investment. It's simply when you turn the money into the investment. So I've turned the money into the stock. That's my cost base. So I buy 1,000 shares of Apple at 152. 152 is my cost basis. Now, the dividends I receive from Apple, how those are taxed, is going to be dependent on how long I've held the Apple before the record date. And if I've held it 69 days, who cares? It's a qualified dividend. This we do care about. Low probability, but it means I'm going to pay a lower rate than my ordinary income tax rate. Non-qualified means I'm paying my ordinary income tax rate on it. Well, you know if you need remediation by what your practice test scores are. We said if you get a practice test score below 60, you need a lot of remediation. If you're scoring between 60 and 70, you should be doing remediation to get it into the 70 range. Okay, so now we need to do, we're doing the same drawing we do all the time, Clyde. The same drawing we do all the time. Well, let me get my screen here. Whoop, wrong screen. Share screen. Boom, let me get rid of this. And let me get rid of that. I think that's on my banner, or is that, there we go. Okay, so let's make the word podcast. Give me a chance to put it in here first. There we go. All right, so the word for the drawing is podcast. Remember, if you win the drawing within an hour, you got to send me an email claiming that you're the winner so I can send you the Zoom invite for that. Are you guys not seeing that? I don't see anybody participating. Is that me? There we go. There are getting some entries. Sometimes my mouse acts up on me and it drives me nuts. Okay, so podcast. We got 12 entries so far. 14 entries. Nico, I'm sorry, you're not allowed to win. We have a rule that you can't win twice in a row. So if Nico wins, then we redraw. Okay, are we ready? Last call. Going once, going twice. All right, let's see who it is. All right, John, you're the winner. So, John, let me put my email up on there for you. Let me get rid of this. And let me get rid of this. And let me put my email up there. There's my email. Send me, John, that you're claiming your winnings, and then I will acknowledge that. And then tomorrow I'll send you a Zoom invite for your coaching call. We can do whatever you want. It helps if you have an agenda of what you think you want to do. Okay, anything else before we call it a night? Thank you for your participation. As I said, we usually do a live stream after this. Tonight we're not, but there is a live stream. If you go to Dean Tinney, tutoring.setmore.com, you can register for the free Zoom live stream that takes place most Tuesdays after we do this. Let me put that up there for you. And that can be found at, where is my, it looks like I must have messed up on my, well, let's just do it again. Dean Tinney tutoring setmore.com. And that's where you can find the free live stream afterwards. You can also find the evening courses, and you can find the other thing that we do free is office hours. And I think, Erica, we filled up the office hour, and I think I opened another one. That's a maximum of 5 participants, and that's for people who either bought a course or bought tutoring. The live stream overtime session is free for everybody. So, all right. Any other questions before we call it a night? All right. Well, remember, inch by inch, your exam is a cinch. Yard by yard, your exam is hard. I'll see you next Tuesday, if not sooner. Thanks, everyone.